Hi there, I'm Sonal Mehrotra Kapoor and welcome to another episode of Coffee and Crypto. Well, last week, in fact, from the beginning of the year, we've all been chatting up about the budget. What will it have for us? And then finally, we have the answer now. 30% tax plus 1% TDS plus your gas fee, etc. So it's come finally under the ambit of taxes, or been defined at least, let's just put it that way, by the government, which is a huge step forward from saying that they're going to ban all cryptocurrency altogether. However, it's a mixed bag, as we've all begun to understand from now. So joining us today on the program will be a panel of experts who will look at different aspects of the budget and what did it tell us about the way cryptocurrency in the country is going to have, what journey is going to unfold in front of us. That is going to be what we will be decoding on the program over the next 30 minutes. First up, we have for you the former finance secretary, and let's try and understand from him what he made of budget 2022, which many are now calling the crypto budget. Crypto budget came with a crypto tax. It's been a mixed bag of sorts. And let me first welcome Subhash Chandra Garg with us. Hello and welcome, sir, back with us on Coffee and Crypto. We've been speaking about this through the week, through months now, trying to understand what exactly is the budget going to be all about. And now it appears that it's a mixed bag, right? There is a huge tax that one has to pay. But ultimately, there is finally a definition of sorts, at least under the tax ambit. What did you make of it?
So this is good in the sense that it brings clarity about the taxation for both the investors as well as the taxation authorities. By the way, crypto assets-based incomes was taxable even before.
Yes.
And some investors were paying taxes, some were not paying. Some tax authorities were levying taxes, assessing it, some were not. So this now brings clarity. So that's, I think, most positive aspect about it. But 30% tax on a financial assets transfer is way above anything else. Any other equity or bond asset is not treated like this. And the bigger one to my mind, that 1% TDS only on the resident buyers is going to create big procedural problems. There are also some other issues connected with the retrospective taxations. How do you treat the income before 2022? So I think on the whole, good move, which can also be addressed in times to come, the hardships thereof. But at this moment, this is, to my mind, going to scupper the party for the crypto enthusiasts and the investors.
So party over, as many are saying, for the crypto community. I like how you said that this is a good move, but there needs to be some changes that need to be brought in. Let me start by firstly this. A blanket 30% on all virtual digital assets. Perhaps also an indication by the government to discourage people or small investors to remain in the market. Perhaps saying that only those who have a huge risk appetite should stay back in the system, and then basically saying plain volumes and then pay back your taxes.
No, very clearly the government wanted to tax at the highest possible rate. And the details are there in the finance bill. It's very clearly mentioned when you look at the definition of the crypto assets, which is there. And it's not only the crypto assets created on the blockchain cryptography technology, but it also says others, which will create a lot of problems in times to come when the government and the authorities try to define what is digital asset. Right. So I am quite convinced that this is a very high rate, and this will create problems. But what it does, I think, bring to the table is that now the people can engage with the government, saying that this is harsh, this is very high, you can't treat this equal to gambling, you can't treat this like completely speculative. you can't take a view that this is to be used as a measure of discouragement, as a measure of practical ban rather than legitimizing or treating this as a legitimate business, which it is so far.
Right. But I just want to ask this. Do you see this as a discouragement? I mean, putting crypto in the same bucket as
the underlying
gambling
message is clear that this is a discouragement. We don't want you. The Economic Affairs Secretary yesterday in the press conference also said, the Revenue Secretary, that if the government were to ever ban it, we will withdraw the provisions relating to the crypto taxation. So the underlying assumption and the view of the government is that this is something not very desirable. But since we have to levy some tax because a lot of income is getting generated, why not start with the highest possible taxation?
Right. My own understanding was that the government clearly understands that you cannot do away with crypto at the moment. So, and there is no ban which will help either, because then it will start to sort of get in the dark web zone as well. So this is what they've come up with, to put in a very, very heavy tax so that they ensure that people with smaller funds at the moment stay out of the business. That's at least the reading that we picked up. But just want to get your sense on how do you think markets, people are going to sort of respond to this. There are two ways to look at it. One, to say, well, finally it is taxable. I will not be in the grey zone anymore. I pay my taxes and I'm clear. The other saying, well, what is the point of putting in money? It's crypto. We went there to make high returns. And if it's going to be taxed at more than 30% now, what it seems to be, what's the point?
Yes, my sense is that while there would be some interest in the people who are only interested in dealing with something which is considered completely legal, legitimate or something, such people might think of coming in. But for the large community, let's remember, anybody who invests in crypto assets has been investing it only for making gains and profits. Now, if that profit is taken away, that punch ball is taken away, then the interest about this asset will definitely reduce. And people will start looking at the other investment options. So my sense is very clear that in the short run, at least, this is going to discourage. A lot of people might actually withdraw. They might try to get out, and this will create the lot of problems and discouragement for the
we'll wait to see actually what comes out of this finally, or will the fence sitters finally enter, or the money that was going in private wallets, will that enter through exchanges now where there's the TDS, etc. That we remain to see. But I have to also ask you about the other big headline from budget, which is CBDC. Digital rupee will happen this year itself, right? And we understand that RBI has had a bit of a heartburn over this issue as well. It is not really ready just yet, but the finance minister quite confident it's going to be rolled out. Could you share with us some details on what form it will be? How will it be used finally? Who gets to operate the blockchain? Some technicalities there.
So the government has taken the most easy option for the digital currency by amending the RBI Act and treating the digital currency as equivalent to bank notes. Now that's a very easy but way to go, but perhaps does not convey anything regarding the form and the type and the design and to whom it is meant for, anything of that sort. And the government is going to rely entirely on the RBI. There are major issues connected with the retail CBDC or retail digital currencies.
Or the wholesale one.
For wholesale, we literally don't need that much, because the wholesale payment system which works on the digital payment systems today are perfectly fine. So I think we'll have to watch what the RBI comes up with in terms of its design, for whom it is meant, account based, to the banks, and so many complex issues are there. My own assessment is that it's not going to come soon. It will take a lot of time. And it would be good if the RBI begins with some experimentations. There are also technological issues. Using blockchain and cryptography technology for a digital currency is a most challenging thing for the retail users at least. And that system does not work with the central bank.
True.
A decentralized currency management by a centralized organization is completely contradictory. So I don't think those things will work. So a lot of thinking has to go into before any prototype of the digital currency even comes through.
All right, a lot of work to be done on that front. For the moment, thank you so much, sir, for joining us on the program and giving us your perspective. Let me break it open to our panel now. Joining us today is Nitin Sharma, General Partner, Co-founder at Antler India. Also with us is Anand Parashuram. He's Executive Director at BFSI Practice Head. It's basically banking, finance services and insurance sector. We also have with us Aman Chugh. He is CA and financial market expert and economist. Lots to ask him about that 1% TDC. So much confusion over which way that is really going to go. And also with us is Sachit Jolly, and expert partner and DMD advocate as well. Aman, let me begin with you. Lots of questions, but that 1% TDS has a lot of people still questioning, will it be credited back? Is this an addition? What happens in terms of transfer? What happens when you transfer, say, from one exchange to the other? Do you pay on both ends? Just tell us what exactly and how exactly is that 1% going to be charged?
So Namaskar. I think this TDS provision which has been incorporated within section 194S is more towards monitor any sort of transfer which comes in this space. And that's why if you look at carefully the new section which has been introduced, which is 2 subsection 47A, it specifically says not only about the cryptocurrency, but it says about the virtual digital asset.
Yes.
And which includes any information, any code, any number or any token, which can be maybe fungible tokens later on going forward as well, not being Indian currency and any foreign currency. So that means they've actually kept only the unregulated, any sort of cryptocurrency or going forward any sort of fungible tokens or even maybe any sort of in terms of information or code being generated. And generated is a very apt word. Maybe they wanted to bring the miners also into the same through cryptographic means. So my observation is that this 1%, first of all, we should be very clear that this 1% is not of income, it is 1% of consideration.
That's right.
But obvious, anyone who does the payment has to charge this TDS. But of course, if it is not the specified individual, we call as specified individual in terms of the limit being given to the individual HUA which come under the audit category, which is 50,000. Other than that, it is 10,000, etc. So I'm not getting into that details.
Okay, but Aman, specific questions here. I understand that if you go into an exchange, most of the credible exchanges have KYC, etc., right? So they have a way in which that 1% TDS can be taken off. So that I understand. When it comes to NFT, when it comes to mining, how will that be charged?
I think the clarifications will have to yet come because the operational issues will definitely evolve from here. But what my point of understanding here as of now is, even if we talk about exchanges on mining perspective or on transfer perspective, but even the individuals have also been brought into this ambit, keeping in view the kind of black money, I should not say this word, but the kind of black money which was siphoned off into the type of assets abroad in the form of different types of cryptocurrencies. I think one find that they would like to encash them. And that's where this catch has been incorporated, particularly this TDS 1% clause.
All right, so we still need to understand more. We still need to understand more about this, and we'll need all CAs like you to actually put your brains together and understand how this is going to unfold. Sachit is smiling because Sachit and I have been talking and we've been figuring out the details ourselves. Still a lot to be discovered over here. Sachit, what have you found out so far?
Well, like as always, the devil lies in the detail. Now, if you look at, and look at it in 2 perspectives. One is what we call the charging provision, which has been brought in, and one the TDS. Now, both have their own set of problems. If I start with the charging provision, Aman was saying, I don't think today we know whether the cost incurred by a miner to generate, in that sense, a token will be allowed as deduction of expenses, or will it be treated as cost of acquisition when you sell it?
Right.
So a person may have actually put in some 15,000 USD to mine an asset, but when he sells it, he may not even get the deduction for that. I mean, huge consideration, because the law is unclear.
Because the cost involved in that is huge as well. The amount of money you
Correct.
put down to get the systems in place is a lot. Yeah.
And the point is, they say that cost of acquisition will be set off against the sale price, but it actually disallows any expenditure incurred to get the asset. So somebody will have to define, when you mine, is that cost incurred or is that an expenditure incurred? Both very fluid today. Secondly, to club NFTs with cryptos, completely different genre of assets for me. Third, whether you will allow loss from one crypto against profit from another crypto in the same year, of course you can't spread it over. But if it's the same genre of asset, will you allow that set off? No clarity today. The section is very fluidly worded.
Yeah.
Then when you go to the TDS provisions, the problems compound. Now let's say like you said, you switch one exchange to the other. There is no transfer. There is no sale. You can't sell to yourself. You're only, relocating an asset. Will you apply a TDS provision? What happens if the TDS, one exchange is in India and the other exchange is outside India? How do you work it out?
No, but technically there would be two wallets, right? If you're on an exchange, you don't have a private wallet. Technically, it would be two wallets. So there would be transfer and there would be...
No, how will you transfer to yourself? See, the exchanges facilitate transfer. Exchanges are not transferring themselves. So I think that's the clarity we are looking for. Secondly, and most importantly today, if you look at an example, if the seller is a non-resident party today and the buyer is an Indian, the TDS provisions, as they say, are today 1%. Now, in those cases where the seller is non-resident, you may have a 40% TDS, because a non-resident will be subject to another TDS provision, 195.
Okay, let's just hold on to
I think that's just too much to...
I know. So what I'm getting a sense from both you and Aman is that there's a lot that still needs to be defined. And perhaps we're all really waiting for a regulation bill to define all this, right? To understand that not all digital currency or digital assets fall under one bucket. There are different forms and different ways in which they operate. So this blanket 30%, how is that panning out? I'm going to slip into a break. Then we'll go back to our other panelists as well and get their perspective. Stay tuned. You're watching Coffee and Crypto. Back. Let me go to Nitin Sharma now. Nitin, your thoughts on which way this is going, and basically an understanding on how do you think the crypto community in India is going to respond to this? I know there is a petition out already which talks about bring down crypto taxes. There is a huge, sort of support group building up saying that this is not fair.
Yeah, no, thanks for having me. I think first of all, I believe our chartered accountant friends will be very busy over the next year understanding dog-shaped coins and ape-themed NFTs and various new instruments. Look, I think this has been perceived fairly positively in general, because while technically it doesn't mean cryptos are legal, practically it means that there is some legitimization. And I think that above all, we've come from bans and criminalization and wondering about blockchain but not crypto, to finally at least saying that these are virtual digital assets, not private cryptocurrencies, because anyway, most of these projects are not trying to be currencies. And this whole debate of legal tender, they're not trying to be that. They are a form of asset anyway. So finally that recognition is being...
But Nitin, I get this response from all industry leaders. I get this response from all exchanges as well. When I speak to investors, they are upset. They in fact come out and say that, this is not what we thought crypto was all about.
So I think that I generally think there are three types of people in India in crypto, right? There are traders, there are holders, long-term investors, and then there are builders. And let's not forget that the third part is also important. They may not be trading everything, but they are trying to build startups and companies. So I think for the second and third category, the peace of mind, or at least some understanding that there is a legitimate framework is a good first step. This is the first step. That's all it is. But yes, for reasons that my peers here already went over, for traders, market makers in crypto, this is very onerous. and it is debilitating. And it's a clear statement that the government is exactly against speculative retail activity. Now, I think we can debate that, and I personally support it because I think a lot of things were being done which were honestly misinforming the retail buyer. True. So it is the job of the regulator to protect them. I do agree that tax is high, but
like
the
regulator hasn't put down any regulations. They've just put down taxes. That's the frustration at the moment. That maybe a regulation should have come first. But this is also welcome. This is also welcome.
My hope is that that we don't just stick with this and use this as a way to delay regulation. Because if it's a few months away, that's a different case. But if it becomes a multi-year process, then this is not helping for reasons that we just discussed.
Yes, in fact, what we are hearing is that the government is in no rush to bring in a regulation at the moment. And the Prime Minister is very clear that he wants to bring in a global regulation, something that he's talked about in international forums as well. So there is some time before we actually get that regulation up and running.
Prepare for a multi-year process here, multi-year process.
Yes, yes, indeed. Anand is with us. He's Executive Director at and BFSI Practice Head as well. Anand, what is your recommendation to people? To young millennials, and I keep saying millennials, but the fact is people invested in crypto are way beyond that. It's not just metros, it's not just millennials, it's white-collared professionals who are actually taking calculated risks at the moment.
Thanks a lot, Sonal, for connecting once again. Okay, in fact, a few months back when we spoke, okay, that time the intention to invest in crypto was around 19% in urban India. That before the budget, we did a survey and actually jumped to 32%. Yeah, the budget. And actually came a lot from the salaried class rather than businessmen. Okay, and people who are investing small amounts of money. And you can see that there's been a pent-up demand. Okay, if you see the first day overall sign-ups for crypto exchanges, okay, in the last couple of days also, it has been 14x and 10x versus earlier. So there's been a huge rush to get in the money out here. And millennials
I'm sorry, I missed that last part. You're saying post the budget, what exactly are the sign-ups looking like?
It's almost like 10x and 14x, okay, as claimed by exchanges.
2 exchanges have claimed this.
Yes. Right. So you can see that there's a rush which is really there. There's a pent-up. It's also because millennials are looking for diversification of funds and are very clearly, okay, not looking at conservative assets. Yeah. It's not that they just want to invest in life insurance and other traditional investments and just grow over a period of time. They are quick buck and they will continue doing that.
I see. And in terms of, so exchanges claim that their user base has actually gone up. And will that sustain? What will happen next? And what will our friends, our CA friends tell us about how exactly to go about with these taxes is something that we'll keep talking about. Thank you all for joining us on this fascinating discussion. Not the last time we're talking about it. But yes, the journey for crypto has just begun, and perhaps one that will keep going on till the time we actually have a regulation in place, and that is going to be a fascinating one. Until next time, bye-bye.